Crash course on finance, financial statements and analysis. Learn how to read and interpret financial statements, and how to analyze financial data. Sure, I'd be happy to give you a crash course on finance, specifically on financial statements and analysis. Financial statements are documents that provide an overview of a company's financial position and performance. They are important tools for investors, creditors, and other stakeholders to assess a company's profitability, liquidity, and overall health. The three main financial statements are: 1. Income statement. This document provides information on a company's revenues and expenses over a given period, usually a year or a quarter. The income statement shows whether the company is profitable or not by subtracting expenses from revenues. For example, let's say a company had total revenues of $1 million and total expenses of $800,000 for the year. The company's net income, or profit, would be $200,000. 2. Balance sheet. This document provides information on a company's assets, liabilities, and equity at a given point in time. The balance sheet shows what the company owns, what it owes, and what is left over for the owners. For example, let's say a company has total assets of $5 million, total liabilities of $2 million, and total equity of $3 million. The balance sheet shows that the company has $3 million in net assets. 3. Cash flow statement. This document provides information on a company's cash inflows and outflows over a given period. The cash flow statement shows how much cash the company generated or used during the period. For example, let's say a company had cash inflows of $500,000 and cash outflows of $400,000 for the year. The cash flow statement shows that the company generated $100,000 in cash during the year. Now that we have a basic understanding of financial statements, let's move on to financial analysis. Financial analysis involves using financial statements to assess a company's financial health and performance. There are several key financial ratios that investors and analysts use to evaluate a company, including 1. Profit margin. This ratio shows how much profit a company generates for every dollar of revenue. A higher profit margin indicates that the company is able to generate more profit from its sales. 2. Return on equity, ROE. This ratio shows how much profit a company generates for every dollar of equity. A higher ROE indicates that the company is generating more profit for its shareholders. 3. Debt-to-equity ratio. This ratio shows how much debt a company has relative to its equity. A higher debt-to-equity ratio indicates that the company is more heavily leveraged and may be more vulnerable to financial difficulties. 4. Current ratio. This ratio shows a company's ability to meet its short-term obligations. A higher current ratio indicates that the company has more assets than liabilities and is able to pay its debts on time. 5. Price to earnings, PE, ratio. This ratio shows how much investors are willing to pay for every dollar of earnings. A higher PE ratio indicates that investors have high expectations for the company's future growth prospects. 6. Earnings per share, EPS. This ratio shows how much profit a company generates for every share of stock outstanding. A higher EPS indicates that the company is generating more profit per share. 7. Dividend yield. This ratio shows how much a company pays out in dividends relative to its stock price. A higher dividend yield indicates that the company is returning more value to its shareholders. 8. Return on assets, ROA. This ratio shows how much profit a company generates for every dollar of assets. A higher ROA indicates that the company is using its assets more efficiently to generate profits. 9. Gross margin. This ratio shows how much profit a company generates for every dollar of sales after deducting the cost of goods sold. A higher gross margin indicates that the company is able to generate more profit from each sale. 10. Quick ratio. This ratio shows a company's ability to meet its short-term obligations using its most liquid assets. A higher quick ratio indicates that the company has enough liquid assets to pay its debts on time. 11. Debt coverage ratio. This ratio shows a company's ability to service its debt obligations. A higher debt coverage ratio indicates that the company has enough cash flow to meet its debt obligations. 12. Asset turnover ratio. This ratio shows how efficiently a company is using its assets to generate revenue. A higher asset turnover ratio indicates that the company is using its assets more efficiently to generate revenue. These are just a few of the many financial ratios that investors and analysts use to evaluate a company's financial health and performance. It's important to note that financial analysis should not be done in isolation, but should be combined with qualitative analysis of the company's business and industry. In summary, financial statements provide a snapshot of a company's financial position and performance, while financial analysis involves using these statements to assess a company's financial health and performance using various ratios and metrics. Now, as promised, here's a poem about financial statements and analysis. Numbers, ratios, and trends. Financial statements never bend. Income, balance, and cash flow. All in one place, a wealth to know. Analysis, the key to use. Investors know not to refuse. Profit margins and equity return. The company's health, they must discern. Debt, liquidity, and growth. The future story, they must both. Stock price and dividend yield. The company's value, they must reveal. Financial statements and analysis. The tools for investors' prowess. To make informed decisions, they must use. And their wealth, they'll never lose. I hope this crash course on finance and financial statements and analysis has been helpful and informative. Remember, financial statements and analysis are essential tools for investors and analysts to make informed decisions about companies and their investments. Start planning your next global adventure with ease and convenience with our Booking.com referral link. https://www.booking.com/index.html?8 equals 7989335 as a great choice to plan your next trip. You can find and book flights, hotels, cars, and local attractions all in one place, and their price match guarantee ensures you're getting the best deal. Thank you for kind support our AnHub Metaverse channel, and please watch more interesting videos here.